what is my favorite type of setup to trade? I've got three favorite setups to trade. The first one would be the washout off of a high for a long trade, or the straight up move for a short trade. Netflix actually just today kind of had both of these. So what I mean is the straight up move. You look at this chart here and you come from 111.60 up to 113.80, and I just call that kind of straight up action. You had 6 green candles in a row on a 3-minute chart. As a rule, anytime I notice 5 green candles in a row on a 3-minute chart, I start looking at this for a scalp short trade. And you can see on Netflix it did so perfectly. You know, topped out 13.80, ended up pulling back all the way to 112, and then it gave me my other favorite type of move, the washout off of a high. So first we had the straight up move for a scalp, and then we had the washout off of a high for a long trade, where you just kind of go straight down. Again, you look at this. This was even, 8 red candles in a row on a 3-minute chart. I started going long today right around here, about 112.40. Ended up dipping a little bit lower, but still, after all, an hour later, the stock was significantly higher, went from 112 back up to 113s. This is my favorite setup to trade. When you get this straight move down on a stock that had just made a move higher, especially on Netflix, which is generally an uptrending stock. The key with these trades is they're typically very short term, and you typically need to have a very tight stop loss. So these types of setups are not going to be for everyone. It's a lot of level 2 interpretation, which we'll go over a lot of level 2 stuff later on in this webinar. But so that's number 1. The washout off of a high for a long trade, or the straight up move for a short trade. Both quick short-term trades usually have high probability and low risk, because you can just kind of trade it versus continued highs or trade it versus continued lows. And again, the rule for me is anytime I see like 5 green candles in a row or 5 red candles in a row on a 3-minute chart, I start paying attention close to try and catch the top or catch the bottom. My second favorite setup is when we gap down in the stock, but we don't break to new lows, or when you gap up but you don't break to new highs. So you can see here on this chart for Netflix, this is back from October 19th, so a few weeks ago. We had a gap down in the shares, and you look at this initial low right here. This is a 15-minute chart. You gap down, and then look later on, 30 minutes later, you try to break that low, but we had a failed breakdown to new lows. So anytime that you are at the low and you can't break down further off of an opening gap down, then I start thinking, okay, maybe this thing's going to reverse. And your setup is then versus the low a day action. So you made a new low, but immediately popped right back up into the range on the day. You see? And then you start kind of curling back up here. So I look at the long trade right here and then trade versus this low a day. The opening gap down that doesn't break to new lows usually sets up a nice long trade for a reversal higher. My third favorite setup, and the one that I have the hardest time trading myself because it requires the most patience, but it is the best in terms of reward, and that is the breakout or breakdown of 15 and 60-minute highs or lows, where then those 15-minute and 60-minute highs or lows act as support or resistance. This is a 15-minute chart of Amazon from November 4th last week. Stock was around 630, and you just have a nice clean move here on the 15-minute chart, and it's playing out on level 2. And the first thing I want to show is you get a great pop, 628 up to 634 right away in this first 15-minute candle here. And notice how then in the 30, 45 minutes that follow, the share price stays at the top of the initial 15-minute high. So we have these two horizontal blue lines here as kind of where the high of the first 15 minutes worth of range occurred. And you look at the price action, it all stayed right up there. So that shows you, okay, the stock made a good move higher first 15 minutes of the day, and now it's holding on to that move higher. And then this first arrow, you can see we break out above that high. And then once you break out above that high, notice how we then hold this horizontal line, this second one here, as support moving forward. And then you just kind of repeat the process. Another breakout above the 15-minute high, and then you act, and then that 15-minute high acts as support on the breakout. And you just keep on going all the way until about 1 o'clock, when the price finally fails to hold the previous 15-minute high. And that was a good signal that, okay, this trend is over, and you can see we started going sideways off of that. But check this out. Then we declined into the close on Amazon, but notice where it found support right here. It found support right at the initial high from the morning session. You look at this action here. This is from 9:30 to 12 o'clock, and then you stretch out that 12 o'clock high, and that's exactly where the price found support into the close, and then the next day you gapped higher. Maybe it's a coincidence you gapped higher, who knows, but the bottom line is risk and reward. We did see that morning high, that's what would be the 9:30 to 12 o'clock high on a 60-minute chart, act as support. So I really like when in the afternoon session you have a little washout back to that morning high on a stock that's been uptrending like Amazon had been this day. I think it sets up a decent bounce play. And in the morning, when looking in the immediate term, I like when you get a trend that's just continuing higher, breaking above previous 15-minute highs, and then turning those 15-minute highs into support like Amazon did here. So to recap, my three favorite setups are what I call washouts, either washouts or straight ups, where you wash out to lows and you set up a bounce, or you move straight up to highs and you set up a little pullback. Number two, when you get a gap that fails to break in the direction of the gap, I like it for then the opposite directional moves. So in this example here, Netflix gapped down, but then as the morning progressed, 30, 60 minutes in, it was failing to break down to new lows in the direction of the gap down. So we're going to look at it for the opposite move, which ended up being a nice move higher. And then lastly, this move where you just set up a nice trend on 15-minute highs, keep breaking those highs, and then those highs act as support on any dips. A couple different styles here. So this trade, the washout and the straight up, this is great for the scalp trade. This is generally going to be a scalp trade where it can really pay out quickly and efficiently. The second setup is more of a wait and see breakout type trade, or a non-breakdown type trade, a reversion type trade, whatever you want to call it, where you're kind of betting on the opposite effect, again, where you're not able to sustain a breakdown or you're not able to sustain a breakout, and it's kind of a bottom picking or a top picking type strategy off of gaps. This third one is great for swing trading. It requires the most patience. You can see if you've got the patience, Amazon went from 630 up to 644 without ever really breaking any supports, and that's a nice clean move. But you got to be patient enough to hold for 3.5, 4 hours there, which I struggle with currently. That's the thing I need to get best at. So these are just good though for helping you identify your style. If you want to be a swing trader, you need to look for these 15-minute type patterns. If you want to be more of a scalper, look for those washouts and straight up type moves.